Hi, this is Herbert from Boom and Crash Academy. I just wanted to explain how to simply design or how to simply put your trade setup for Boom and Crash. All right, we are going to use moving averages, Bollinger Band, D marker, and RSI just to simplify the strategy. First of all, let me show you the setups. You go to function tab where you are able to access. Here we've got moving averages, two moving averages. We've got Bollinger Bands. We've got relative strength index, which is RSI and D marker. The setups are like this: moving average. The first moving average is the 50 linear weighted moving average applied to weighted close. The second moving average is 100 linear weighted moving average. The third indicator we're using is Bollinger Bands, and we put our period to 500. Deviation is 1.619. Shift is 0. Apply to close. Style pixels is 4 pixel and color blue. Then we've got on the second indicator, window 1, we've got RSI. Period is 6 and the style is 4. Levels is 10 and 90. So here you can say 10 is buy and 90 is sell. So that you'll be able to follow the strategy. Okay, so we've got D marker. D marker, the period is 500. The style is 4. Color is black. So to add Bollinger Bands, you just go to your indicator list and click the function plus sign to be able to access the Bollinger Bands. And then you'll be able to get the Bollinger Bands on the list. All right. Once you get to the Bollinger Bands, you click it, then you can edit the functions. After you edit according to what I said, after that, you click done to add it. Okay, the same. Now to get the second window open, you need to first of all tap RSI. RSI, relative strength index, when you tap it and then you edit, when you click done, it will now open the second window, which is this one below. After you have opened and put your setup, now you click the same function to add the D marker. You see down there. There it is. You click the D marker. You add the functions. After that, you'll be done. When you do that according to this setup, you should be able to have something like this. All right. So we are usually pinching this out so that you are able to see exactly what is happening. Our strategy here is this. The moving averages, they'll go beyond or outside the Bollinger Band, the upper Bollinger Band, for example, in this matter. And now when they cross outside Bollinger Band, or when the market is coming outside Bollinger Band, then the 50 crosses below 100, you place a sell. And at the same time, you would have the D marker touching and the RSI touching the 90 overbought area. You stay in this trade and you hold until the D marker touches the overbought or oversold area 10. Okay, for example, in this case, we had the market crossing, coming outside Bollinger Band, and the market came from the Bollinger Band and went piercing down the Bollinger Band. Then after that, it crossed up. But look at this, the D marker has not yet touched up. So if you scroll, you find that here, the D marker touched, then the market crossed. Okay, that's a very good example. Here's a good example. The market went below the lower Bollinger Band. Then the D marker had already touched the oversold area, and the RSI had already come out of the oversold area. Then the market crossed. When it crossed, you stay in that trade until you pierce the overbought area, which is the 90, and also at the same time I'm not able to do the notation. I don't know how to do that, but let me use this. Okay, here, all right, that's better. Here, the market crossed as it was coming from the overbought area. So you'd have closed your trade here. All right, you entered your trade. You entered your trade here in this zone, and you stay in that trade all the way coming out here. That's enough for the day for you to double your account if you use a proper lot size, depending on what size you are using. But this trade is a very, very big trade. This is 1 minute, but still you have those setups. And then if you use that on 5 minutes, it's even better because it's clear. Look at this 5-minute chart. All right, the market crossed here, so you entered your trade here as it was coming outside the lower Bollinger Band. You stay in the trade all the way, and you exit your trade here. You exit your trade here when it crossed. So that's enough. That trade will take you a day or two just to stay in that trade. And then after that is done, you are also already entering into another trade. You are entering into another trade here, right here, and then you stay in that trade until the market crosses up again here. So that's the setup, guys, and if you follow this, you make good money. All right, if you have any question or comment, let me know. Thank you.